China is slashing steel prices to make the growing Vietnam steel industry collapse. That's right, it's an economic war where China is not pulling any punches. This aggressive move by China will have a ripple effect across the Vietnamese economy in all industries, from the construction to the steel and also the real estate industries as well. So why is China doing this, and what are they trying to achieve? We will uncover China's hidden agendas, real motives, and strategic position behind their aggressive move. Also, we will talk about how Vietnam will be defending itself in this high-stakes battle. You definitely don't want to miss this, and that's what we'll talk about today, so let's get started. Hello, my name is Ken Duong, international business immigration attorney with over 15 years of experience doing foreign direct investment from abroad to Vietnam, especially in the factory sectors, helping U.S. companies that have moved away from China and setting up in Vietnam. And today, we're specifically talking about China and its true impact on Vietnam. To understand the gravity of China's actions, we have to look at the steel industry in Vietnam. Based on the Vietnam Steel Association statistics, Vietnam steel industry has grown 6.4% in 2024, up to a total of 21.6 million tons of steel produced for the Vietnam market. And that's not all. Exports of finished and semi-finished steel products from Vietnam increased by 12% to a total of 13 million tons. In fact, this shows Vietnam's resilient economy, bouncing back from a challenging 2023 with macroeconomic difficulties and also a slumping real estate market. The steel industry's revival will boost profitability within this sector, especially with Vietnam's GDP expected to grow between 6 and 6.5%, which looks bright for its future. On a global scale, the World Steel Association predicts that the steel demand will increase to 1.85 billion tons by 2024. Within the ASEAN region, including Vietnam, with an expected growth of 5.2% in demand. So who are Vietnam's largest steel export markets? Leading the way is the ASEAN regions with 32%. Next up is the EU with 28%. And just the US alone is already 9%. So definitely keep these numbers in mind, and I'll tell you why. Let's address the elephant in the room. A whopping 80% of you are not subscribed to our channel. But if you find this information valuable, or you just like to hear my soothing and charming voice, or my witty banter, then I would highly recommend that you become the 20% that are subscribed to our channel. Just by taking 1 second, click on the subscribe button, and you get all the information. You get to see my face every single day, and DG will be very happy that you are a great subscriber. Thank you. The boom in the steel industry is closely tied to Vietnam's real estate sector. The increase in the supply of apartments in Hanoi and Ho Chi Minh are expected to grow by 30% and 20% respectively. Also, investor sentiment continues to be on the rise, causing the demand for construction steel to explode. Public investments are expected to grow as well, with an expected disbursement of $26 billion for this year, especially for infrastructure projects of the North-South Highway and also the Long Thanh International Airport. But wait, just as Vietnam's steel industry is on a roll, China has a plot twist just like a thriller. In April alone, Vietnam imported 890,000 metric tons of hot rolled coil steel, which is 1.5 times as much as been locally manufactured. But guess what? 71% of that imported steel came from China. Also, between January and April, Vietnam imported a total of 3.9 million metric tons of steel, which is an increase of 32% year on year. But guess what? Also, 73% of all of that steel came from China, which is more than double the amount of the same period last year. Local steel firms are calling foul due to the influx of cheap China steel, which dodges trade remedies and causing unfair competition. Chinese HRC steel is one of the cheapest and consistently is much cheaper, thus flooding the Vietnamese market very easily. In fact, HRC steel is $123 cheaper than its closest South Korean counterpart. China's ability to slash prices is not a matter of market dynamics, but maneuvering by the CCP. The CCP has a long history of subsidizing its state-owned enterprises to lower prices and thus beating out the global competition. Therefore, other countries cannot compete. So we are going to talk to you about how this works and some very concrete examples. First and foremost, the Chinese government substantially subsidizes companies through direct financial support, tax breaks, and also very favorable loans from the state banks. This allows the Chinese companies to have extremely low prices for their steel manufacturing. Moreover, when you are not worried about profitability because of these subsidies, then you can set your prices ridiculously low. For example, take Bao Steel, which is a state-owned Chinese steel company that has received billions of dollars in subsidies throughout the years, thus making their pricing structure very low, hard to compete for other manufacturers in Vietnam, South Korea, and the United States. What is the result? The steel prices of Bao Steel are so low that it is unsustainable for any privately owned company to make a profit, and thus losing out in the global competition. Another advantage that Chinese steel companies have is access to cheap raw materials. The CCP negotiates in treaties and agreements on a large scale to purchase raw materials such as iron ore and coal. They have standing agreements with Australia and Brazil, which are some of the largest exporters of these raw materials, and this allows for steady pricing, fixed pricing, and an abundance of raw materials that are very, very cheap compared to any privately owned company that can purchase this amount. This further lowers the price of steel production for Chinese steel manufacturers. Chinese steel companies are notorious for overcapacity. The companies produce more than they consume domestically, leading to a surplus. With the help of the CCP, these manufacturers will export this excess steel at a very low price, especially below market. So instead of reducing production, these steel companies, with the assistance of the CCP, flood the international markets with the steel, but sell it at below price. This practice is known as dumping. A case in point is the US-China trade war. The US accused China of dumping into the international market rock-bottom prices for steel against the interests of American producers. In 2016, the US imposed a large tariff on Chinese steel into the US market. Nevertheless, the Chinese continued to overproduce and flooded the international steel market with rock-bottom prices for steel due to their overcapacity and substantial government support. So with China's steel industry fortified by state subsidies, cheap raw materials, overcapacity, and lax regulations, it's no wonder why their steel prices are so low. But this impact will be very profound and deep for the Vietnamese steel industry. How will Vietnam be able to defend itself against this onslaught? What measures will Vietnam need to implement against this unfair competition? So, stay with us as we discuss Vietnam's strategies to defend its steel industry and ensure economic stability in the rise of China's aggressive tactics. Don't go away. In response, Vietnamese authorities are mulling over a petition by local firms to probe into anti-dumping measures against Chinese steel companies. And Vietnam is not alone. In Thailand, authorities are launching an investigation into the anti-dumping practices as well that is causing the local production of Thai steel to only 30%. But why is China slashing these prices so deeply? So we have to zoom back and look at the macroeconomic context, which is the US-China trade war. Amidst the economic clashes and tit-for-tat tariffs, China also needs to offload some of the excess production of steel as well. By slashing these prices, China is sending a strong message to the global market that they are a force to be reckoned with. This move is a strategic play in order to offload excess production, maintain cash flow, and also to destabilize emerging markets like Vietnam. As a concrete example, let's take the US tariffs on the Chinese steel and aluminum sectors. Because of these tariffs, the Chinese are not able to export as much steel into the US market, thus they have to look for other markets. Since these tariffs were imposed, China has been looking for other markets as well. And Vietnam is a prime target due to its booming economy and increased demand in steel. By flooding the market with cheap steel, China is looking to undercut local producers, creating dependency and also exerting economic control over Vietnam. But what can Vietnam do to defend against this Chinese onslaught? Tariffs are just one option. Vietnam can impose anti-dumping duties which will level the playing field but also protect local producers. But that is really not enough. Vietnam needs to improve its supply chain, invest into technological advancements, and also enhance the quality of the goods in order to compete in the global market. Now, let's take a look back at the real estate sector. The flooding of the market with cheap Chinese steel doesn't only impact that industry, but it impacts the real estate industry in Vietnam as a whole. With supply of apartments in Hanoi and Ho Chi Minh increasing by 30% and 20% respectively, the demand for construction steel is crucial. If China continues to flood the market with cheap steel, this will cause price volatility and disruptions in the supply chain, affecting the construction timelines and costs. Also impacting the public investments into the mega projects of the North-South Freeway and also the Long Tan International Airport. With disruptions in the supply chain, will cause major delays in the construction of these major infrastructure development projects in Vietnam. Our law firm specializes in helping US and European companies to relocate to Vietnam and tread the turbulent waters. We provide custom tailored solutions to help with your smooth transition, protecting your assets and investments, and also helping you grow and understand this dynamic market. If you're considering the move, feel free to contact us to help you with a seamless transition. On a personal basis, what my thoughts are on the US-China trade war and also China flooding the steel market in Vietnam, impacting the real estate market. The real estate market is very important to growth of any country, but here in Vietnam as well, as it's a growing economic power in the world. Housing is needed for the people, infrastructure is needed for transportation of people and goods, and also it's a great way to stimulate the economy. But without the steel at a good price, also at the right timing to fulfill all these projects, it could hinder a lot of the Vietnam's growth. So therefore, the Vietnamese government needs to focus tremendously on how to protect its industry, investigate on anti-dumping measures, and also educate the steel manufacturers in Vietnam on how to be global players. So that's my personal opinion, and I truly believe that some of the big steel producers in Vietnam will get through this and will be able to be global players. In this complex web of economic warfare, trade remedies, and infrastructure development, Vietnam stands as a crossroad. With the decisions that are made right now in Vietnam will determine the future of the steel industry and the broader economic stability. So what are your thoughts on this video? Can Vietnam protect its steel industry against the onslaught of the Chinese steel companies? What does Vietnam need to do in order to continue to compete globally? Those are things that we want you to leave in the comments below so that we can get a better understanding of whether you should invest into the steel market or not. But as always, on behalf of Duong Global, thank you very much for watching this video. Make sure you like our Facebook page, subscribe to our YouTube channel, comment below what your thoughts about this Chinese flood of steel product, and also click on the bell for notifications. So thank you very much for watching this video, and I'll see you on the next one.